How's everyone doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. So today we're going to take a look at an article from Independent Banker magazine. I wanted to take a look at and look at the question, does niche lending really help your bank to build better relationships, understand your customers and community better? And I thought this article really hit the nail on the head in terms of looking at that particular question. So let's take a look at this article. This is called Specialty Lending that Strengthens Communities. So community banks continue to be the engines of their local economies. Doing what they do best, these three community banks offer financing in specialty areas for organizations that contribute to the well-being of their served markets. Now, we're going to look at three banks in this particular article, and I'm just going to run down real quick. So the first bank that we're going to look at is called First Guaranty Bank, and they have a focus on commercial leasing. They have $4 billion in total assets, and they are located in Hammond, Louisiana. The next bank that we're going to look at is called Bell Bank, and they have a focus on nonprofit lending, and they have their $13 billion in assets, and their location is Fargo, North Dakota. And the final bank, the third one we're going to look at here, is Georgia Banking Company, and they have a focus on ESOP lending, which is very interesting. And they have total assets of $2.5 billion, and they are located in Atlanta. So those are Georgia Banking Company, Bell Bank, Bell Bank, and then the first one up here was First Guaranty Bank. So we're going to look at these three different scenarios here, so I think are kind of some interesting ones. So at first glance, the aviation, dentistry, and poultry farming sectors might not seem to have much in common, but those industries, along with dozens of others, are a growing focus for community banks that are looking to gain a foothold in niche lending. Specialty lending offers significant advantages for both banks and the communities they support. Focusing on a particular niche allows banks to develop deeper expertise and a better understanding of the issues and pain points that customers in a particular industry face, allowing lenders to provide guidance and tailored financing solutions. Niche lending also creates an opportunity for banks to use relationships and expertise to diversify and grow their loan portfolios. Candidly, some community banks land in a particularly specialty by chance. As they're pulled along by existing customers, one or two deals may open the door to many more. In other cases, banks take a targeted approach to seek out specific growth sectors and hire key people who can help lead that growth. Independent Banker talked with these three banks that have developed specialty lending and employee stock ownership plan financing, commercial leases, and nonprofit lending to hear how they're managing the challenges and opportunities as they continue to grow their niche lending businesses. So, for many companies, equipment is critical to keeping operations running. First Guaranty Bank in Hammond, Louisiana, finances heavy commercial equipment and manufacturing lines through equipment financing loans and commercial leases, a niche that has contributed to the bank's growth. First Guaranty entered the commercial space about 10 years ago when it bought a pool of commercial leases from another bank that was looking to exit the business. Today, its commercial leases represent roughly 8% of the $4 billion asset bank's overall loan portfolio. It's a growth industry, and it's given us a nice niche to focus on long term, says Randy Vicknair, Chief Lending Officer at First Guaranty Bank. So combining leasing and lending. So the underwriting on a commercial lease is very similar to the underwriting for a traditional commercial and industrial loan. The difference is that you have to take a deeper look at your collateral with the lease structure because the bank kind of takes ownership of that collateral and leases it back to the party. Unlike equipment financing, commercial leases generate monthly rent payments instead of note payments, often at a higher yield. A commercial lease also might require more analysis depending on the type of lease. A capital lease will have a dollar payout per dollar buyout, which is similar to equipment financing on the loan side. An operating lease is typically structured with a residual balance, which usually benefits the customer by allowing a lower monthly rent payment. The offset is that at the end of the operating lease term, such as 3 or 5 years, the customer will have some remaining residual balance. The customer can either pay the balance off in full or structure extension payments on a set schedule until that residual balance is paid off. Now, stepping outside its footprint. So First Guarantee recognized the opportunity to go outside of its geographic market to generate additional growth in its commercial lease business. The community bank will consider deals across the U.S. where there is an underlying strength that lowers the risk, such as higher credit quality. It's been a great opportunity for us to obtain new clients because sometimes their senior lender has covenants that restrict them from doing different financing arrangements. Commercial leases also provide cross-sell opportunities to existing clients, such as providing another option in situations where an equipment lease might not work. First Guarantee is one of the few banks of its size competing for commercial lease deals in a market that is dominated by big banks, privately held commercial lease companies, and equipment financing companies. One of the ways that the community bank distinguishes itself in a competitive market is through its ability to move quickly, to make decisions, and fund deals. So again, yeah, very interesting. Equipment financing, definitely a very niche, absolutely a niche product. So very interesting there. Now let's take a look at Bell Bank. So supporting nonprofits aligns with many community banks' mission to support organizations in their local communities, ranging from art and cultural bodies to groups that provide food and shelter to people in need. But banking nonprofits is also big business, considering the more than 1.8 million registered 501(c)s organizations across the U.S. The big purpose of what we do here and what we pride ourselves on is giving back to the community and in banking with a purpose, says Reen Hamilton, Senior Vice President and Commercial Banking Manager at Bell Bank in Fargo, North Dakota. That underlying goal was the impetus for Bell Bank to create a specific focus on supporting the nonprofit sector. So giving and receiving support. So nonprofits are now a large part of the community bank's 13 billion asset that they serve across its commercial banking footprint in North Dakota, Minnesota, and Arizona. There are so many nonprofits within each of our markets that are the fabric of our communities, says Hamilton. In Arizona alone, nonprofits represent 8% of state GDP and employ more than 200,000 people. We also recognize that if those organizations are not supported by their financial institution, they're going to be challenged in supporting their community, says Hamilton. So it's part of our social responsibility at Bell to ensure that we're providing that level of attention to them and providing that gap that sometimes the public and the private sector leaves behind. Nonprofits face challenges such as irregular funding cycles or relying on time-sensitive grants. Bell Bank aims to tailor its services and products to align with nonprofit-specific needs, help with their pain points, and provide flexibility for mission-driven organizations. Many nonprofits are facing bigger funding challenges in the wake of federal budget cuts. No doubt, rural nonprofit organizations are especially reliant on this funding. 42% of the rural organizations surveyed report that they receive more than half their funding from federal sources. So, and then it gets into kind of navigating revenue challenges. So the number one hurdle in banking nonprofits is the unpredictability of their revenue streams, which can complicate any potential lending situation or financial planning. We're well aware of that, and that's just the nature of the business and the cycle that they're in, says Hamilton. So Bell Bank addresses that by staying informed of any changes within an organization, as well as keeping current on regulatory changes or requirements coming from a state or federal level that a nonprofit customer has to abide by. It's also important to have the right team in place, one that is educated on different niche markets and challenges within the nonprofit sector, Hamilton adds. So, and then it kind of goes into a bunch of questions that they ask on that. And then we're going to get to our last bank here, which is Georgia Banking Company. So as a senior vice president, commercial relationship manager, and ESOP specialist at $2.5 billion asset Georgia Bank Company in Atlanta, Holly Sims has seen numerous examples of the positive community impact that stems from an employee stock ownership plan, also known as ESOP. Such transactions often allow a company to keep operating in the hands of its employees, meaning that the business and jobs stay in the community. The ESOP lending often comes into play when a business owner is looking to retire or exit the business. The owner sells the company to a trust, which holds the stock of that company and gives those shares to employees annually as part of their compensation or benefits. ESOPs are recognized by the IRS as qualified retirement plans. Employees become stakeholders in the company, and when an employee leaves or retires, the company repurchases the shares. If you sell your company for $45 million, you're probably going to want some cash and not just a whole bunch of notes from the company, says Sims. Georgia Banking Company provides a loan typically based on a multiple of the client company's longevity and earnings before interest, taxes, depreciation, and amortization. That permits the selling party to convert a portion of their seller notes to cash. Generating stable repeat business. One advantage of ESOP lending for community banks is that the loans tend to be very stable. The default rate on an ESOP loan is lower than that of a standard C&I loan and about 6 times less likely to default than a private equity transaction, according to Sims. ESOP lending also generates repeat business. We are not refinancing the entire portfolio of a seller's notes. We do about a third, and then when they get paid down, we do it again. When those get paid down, we do it again, says Sims. It's almost like having an annuity, and it builds a really good quality commercial portfolio for the bank as well. Because when you help a company do something like this, they tend to be very loyal clients. For community banks that might be considering engaging in ESOP lending, it is a heavy lift, says Sims. In addition to the complexities in structuring transactions and tax considerations, the ESOP marketplace is small and tightly knit. She advises that it's important to hire someone who is experienced and has contacts in the industry. Another important component is good credit partners. We need to know what appropriate leverage metrics to use and what levers to pull if we see a company's cash flow start to get a little sideways, Sim adds. So, again, 3 excellent examples here of doing ESOPs, lending to nonprofits, and doing commercial leases. I think, look, I am a firm believer that in the phrase, you cannot be all things to all people. You kind of have to pick, what is it you want to do and go down that road, right? Head down that path, focus on that specific group niche. And the funny thing I've always said about banks is that most people think that, a bank is a bank is a bank. They don't realize that just about every bank out there has a certain kind of niche. Some banks, you go, I mean, I've had some banks that have come in and say, oh, hey, I went to 3 banks for a startup loan and they all turned me down. And I'm like, well, the problem is none of those banks do SBA lending. And that's really what you need. You need like an SBA 7A loan for your startup business. So, and then I would say, like, okay, go see these 3 banks are the top SBA lenders in the market. I think they would have a big interest in making that loan to you. Or if you're looking for some kind of asset-based lending, maybe you need some kind of middle market financing. Maybe you're a residential home builder and you need tract home development financing. Again, there's only certain banks are going to want to be into that or going to want to do that. So again, I think developing a niche for your bank is critical. It's critical to the strategy, to the overall success of your bank over time. And I think developing niches like this are a fantastic idea for the bank, whether it's small business lending, certain types of commercial real estate, residential mortgage lending, consumer lending, whatever that flavor may be, stick with it, become the best at it, and really focus in on it. That is what is going to drive ultimately the success of your bank. So with that being said, I will wrap this episode up by saying, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I thank you for listening. Have a great day out there, and I will see you again real soon.